The cybersecurity side of the cryptocurrency industry has always been the backbone of the space, for better or for worse. When this backbone was weaker in the past, so too was the industry as a whole. Poor cybersecurity standards and practices made the industry seem dangerous and uninviting to new participants. Now that cybersecurity standards have been boosted, however, a whole new crop of institutional entities has set up shop in the crypto world. Recently, finance magnates sat down with Michael Shaulov, chief executive and co-founder of fintech cybersecurity infrastructure firm Fireblocks. Michael spoke about the evolution of the cybersecurity side of fintech, including today's top technological standards and the implications that they have for the crypto industry. I'm Rachel McIntosh, and this is FMTV. Michael, I want to thank you so much for taking the time once again. Thanks for coming on the show.
Thank you so much.
Yes. So I know who you are, but can you tell our listeners a little bit about yourself and the work that you do?
Sure. So spent the last 20 years or so in the cybersecurity space. So about 20 years ago, I started in the Israeli Cyber Command. Fast forward to the beginning of the previous decade, so around 2011, I started my previous company, which was focused on mobile security. That was called Lacoon. And we basically, what we've done, we created a platform for enterprises to protect mobile devices or smartphones from cyber attacks, as folks were buying iPhones and Android devices, and were looking to connect them to business applications and to email.
Mm-hmm.
And then we got acquired by a very big, the biggest cybersecurity vendor called Checkpoint that I was running their mobile and cloud security portfolio. And about 2.5 years ago, we basically started Fireblocks. That our goal and what we were able to build in Fireblocks is a infrastructure for financial institutions that are working with blockchain and digital asset technologies, and to essentially secure their operations from a custody and settlement standpoint.
I see. So what was the thing that really drew you in particular to the cryptocurrency blockchain sort of angle of cybersecurity?
Yeah, that's an excellent question. So when I was still working at Checkpoint, we were expert in mobile security, but at some point we were actually brought into a cyber investigation in South Korea where 4 cryptocurrency exchanges over there got hacked by what eventually was discovered as the North Korean, or at least the opinion is that the attribution is for the North Korean cyber teams. And they were able to steal $200 million worth of Bitcoin and other cryptocurrencies overnight, right?
Yeah.
So, the interesting thing about cryptocurrencies and blockchain-based assets is that there is no recourse, right? Once it's gone, it's gone. And although I've spent a lot of years in the cybersecurity space, you rarely see a situation in which someone loses $200 million overnight. So we started to basically drill down into the actual what was actually going on, sort of outside of that specific incident. And what we've discovered is two things. One is that the future of finance is really around blockchain and digital assets. Nowadays it's much more clear, as we see central bank digital currencies, stable coins, Libra, and a lot of great innovation that is, I think, coming in the next year or so. But even back in the days, it was clear that this kind of technology can really solve a lot of pain points around counterparty risk, access to banking, or access to basically to financial assets, basically everything around inclusivity, and also speed and fees. So there was a very clear thesis of why we should invest there. But there was also, when you basically go back to 2017 and early 2018, there was also a huge lack of proper infrastructure for financial institutions and fintech companies to really operate in that space in the right way to really bring innovation and the right business models, because the only thing that existed more or less back in the days was essentially cold storage, right? So funds were locked, and a time like you would wait, I know, like a day or two to actually do a transaction, which was sort of the complete opposite of the promise of, I guess, what you would perceive as a virtual or digital assets, right?
Right, I see. What does Fireblocks do in the cryptocurrency digital asset space that other cybersecurity companies don't do, or perhaps don't do as well?
Yeah, so I mean, I think that when we started the company, we sort of viewed ourselves as a cybersecurity company, but I think we sort of evolved into being a fintech infrastructure provider with with a team and founders and technology that is a cybersecurity. But at the end of the day, we are an infrastructure.
Hmm.
We are basically the pipes and the vaults, right? So we provide two main components that are really critical. The first one is what we call a custody technology, right? Basically, the ability for financial institutions to set up an infrastructure in which they can set up custody, or essentially accounts that can hold cryptocurrencies or digital assets for themselves or on behalf of their clients if they have a B2C business or some kind of custodian relationship. So that's sort of like component number one. And in that component, our claim to claim is that we actually were able to bridge the gap between availability or speed and security, right? So our infrastructure is extremely secure, but it's also extremely fast, robust. We're doing hundreds of thousands of transactions per month with a capacity to do 60 transactions per second and so on, right? So that's component number one. The second component is actually probably even a more unique component, where what we've actually discovered is that the main risk or the main operational hurdle when you're actually doing a cryptocurrency or blockchain transactions is actually at the moment that you want to transfer, to actually make sure that you're transferring to the right party, right? Because the way that blockchain or cryptocurrencies work is that you essentially have a deposit address, which is some kind of random number that represents the person that you're going to send your assets to, your Bitcoin or your security token or whatever. And if someone basically spoofed that address, and that can be a hacker that was able to impersonate the other side, or it can even be an insider, right? Basically, and an employee that now wants to send this to his own wallet and run away with it, then it's really difficult to make sure that the transaction will actually go to that right party. And regardless of what is the custody technology, people will spend a lot of time to validate that they're sending the transaction to the right party. So they will do test transfers, which basically would send like 0.0001 Bitcoin to the other side. And then they will do a video conference call to ask the other party, hey, did you receive it? And they will say yes. And then they will need two people to validate that they're sending, the $100,000 worth of Bitcoin to the same address, right? So it was a really cumbersome process. And we were able to essentially solve that through a technology that we call the Fireblocks network.
Okay, I see. So basically, when you say that you're an infrastructural firm, this is primarily kind of what you're referring to.
Yeah, I mean, because essentially what we provide people is both the storage, but then the pipes that they need to connect them and move those assets or sell those assets, and it really sits at the bottom of the infrastructure that they need.
Right. So when you on the Fireblocks, on the Fireblocks website, we can see that you have plenty of institutional clients: Genesis, Galaxy Digital, Blockfills, Prime Trust. The list goes on and on. And so, is this primarily the kind of service that you're providing those clients with, or what does working with an institutional client look like when it comes to providing cybersecurity for crypto assets?
Yeah, so actually, the interesting fact is that we just crossed our 100 customer, and
Oh,
that's
congratulations.
yeah, it's pretty amazing that we were able to scale to. I mean, within a year that we are in production, we scaled to a fairly large amount of financial institutions and the institutional parties that we serve. But to your question, I think that the really interesting thing of working with those parties is that we really sort of serve some of the biggest entities in the space, from brokers to exchanges to hedge funds to all the lending providers like Celsius and BlockFi and Exo and so on. They all have slightly different use cases and slightly different operational requirements. And I think from our standpoint, the primary goal is, when we start to work with a client, is to really walk in, have the discussions around both on the security side, on the operational side, on the compliance side, understand what their requirements are, where they are today, where they want to be from a business standpoint, right? Do they want to be more efficient? Do they want to scale faster? Do they want to basically offer new services? And then we have a dedicated customer success team and solution architects that basically come up with the let's say, the configuration and the topology of how our platform need to be configured and integrated for them. Mm-hmm. And we work with them to implement that. And then and it's sort of like it's not a one-time process, right? It's basically a continuous process, because once we set them up for to hit the first objective, and they hit the first objective, then there is more appetite, and then they want to go to the next level. So I guess a good example is Celsius, that is one of the most well-known lending providers in the space. When we started to work with them almost a year ago, their objective was to really secure and make it more efficient, the process in which they provide loans to their institutional counterparties. And that was like the first use case that we worked with them on. And then once we were able to unlock the speed and the efficiency and really help them to scale, I think they scaled like fourfold through the period that we were working with them on that front. They also wanted to bring their retail business to us, right? So they, on the other side, they actually have a mobile app that works with where retail customers make the deposits into. And we were able to change the custody for that side for them and make their custody more secure, more robust for additional blockchains and so on. So, it's sort of a moving target, but that's the fun, right? Basically, the fun is just to see your customers grow and to continuously support them with new things, new innovation. In the last couple of months, we invested a lot in DeFi. That became a thing. So, yeah.
Can you talk a little bit more about that when you say you invested a lot in DeFi? What do you mean by that?
So, the DeFi space clearly exploded, right, over the last maybe 3 months or so. Funny enough, we actually, I think we were the first institutional provider that integrated with DeFi back in March. So we integrated with Compound. That is one of the, I think that the leading protocol for decentralized lending and borrowing. So back we were in discussions with Compound for actually for a long period of time, and we were really excited about the opportunities that DeFi and specifically what we're bringing to the table can mean to our customers. And we actually integrate them back in March. So we had a couple of hedge funds that they had strategies that were directly involving Compound. Mm-hmm. And then, that was more, I guess, luck than anything else. Clearly, we've done it about 3 months before, or 2 months before the space, we start to see all this hype. And once the DeFi protocol started to essentially move into this liquidity mining phase, where they were providing incentives for people to use it, we just found ourselves in a prime position, because we already had the support, right? All of our customers, if before that maybe like 3 or 4 customers of ours were using Compound, it was like simply overnight we had dozens of customers that were asking for us to turn this feature for them, and they started to interact with Compound. And now we are investing in integrations, sort of secure integrations with more and more DeFi protocols. I mean, the problem is, with just generally speaking, with DeFi, is that from an institutional standpoint, most of those protocols are currently designed from consumers, right? So you have just like a retail-oriented website, and you're supposed to use MetaMask and a Ledger Nano, which is cool if you're, if you're just a retail user.
Yeah.
But if you're an institution with like 20 employees or 20 operators, right, that they all need access. One, it doesn't scale. Two, you don't have the security that you need. And three, usually you have some kind of fiduciary duty to your to your depository or to your limited partners, so on. So we basically wrap the experience of accessing DeFi in a secure way that has the compliance, that has the policies, that has the workflows, that every interaction with the DeFi protocol is properly governed.
Right, I see. And so, I think that it sounds like that this transition towards doing more and more business in DeFi is an important part of how, you not only Fireblocks, but sort of the whole cybersecurity side of the crypto industry as a whole has been moving in that direction increasingly. Can you talk a little bit more, over the course of the last, let's say 2 years, what have the most important changes been in the business that the cybersecurity side of the cryptocurrency industry has undergone? And what do you see kind of coming next besides this whole DeFi thing?
Yeah, I mean, I think that since we started, I think that the evolution was quite amazing. I think that when we just started, I think we had to explain people why it's okay not to use cold storage, right? Why they can use something that is connected to the internet, and they can have real-time access to the asset,
Right.
and it can still be secure. So for some time, that was the discussion, and we had to explain them. We leverage a technology that is called multi-party computation, which is essentially the main technology that is used today to solve the private key problem, right? So,
right.
Well, I mean, the main, there are basically two main problems, two main cybersecurity problems that you really want to solve. The first one is, how do you making sure that the private key is not being stolen or compromised? And the second problem is the problem that I explained around when you're transferring the asset. How do you make sure that the public key of your counterparty is not spoofed, right? So those, like, broadly, those are the two problems that you want to solve. And on the custody or private key side, primarily the question was, hey, we're used to the fact that this private key sits in cold storage, and now you basically bring it online. I heard that hot wallets are insecure, right? So there was a lot of education and a lot of explanation that had to go into explaining people and educating them why fundamentally and also there are other providers that were using this multi-party computation technology, and why this can actually allow you to be both online and secure, right? So I think that was an evolution that we've seen. And then I think at some point the conversation shifted, right? So people understood that it's no longer cool to be in cold storage, because the market had changed, and in order to really generate revenue, in order to basically provide the relevant business models, you have to have the right access and a fast access to the assets. And then the conversation basically shifted from we heard about multi-signature or multi-sig, which is a technology that was developed for Bitcoin back in 2012, and you coming with this MPC thing, multi-party computation thing, explaining what's the difference and why this is more powerful and more secure. And just generally speaking, MPC is a somewhat more complex technology to understand. So a lot of the effort went into explaining people why multisig is not sufficiently scalable for them, why they should actually use MPC. So I think that this is something that we've seen, but I think the nice thing for us and also for others is that the market sort of evolved, and I think that this became a standard, and it's great because I think that not only that it puts us, I guess, on the right side of the technology evolution, but I think it's also extremely beneficial for the market because it really unlocks the power of all the use cases that we were dreaming of, from remittance to security, to security tokens, to all that kind of stuff, and it also allows customers to do it in a secure way, right?
Right. Yeah, I think it's so important to talk about this concept of MPC because I was speaking with Diogo Monica not too long ago, who's one of the founders of Anchorage, and he described this sort of old way of thinking about custody, with ledgers and multiple hardware wallets and all of these kinds of things as pirate custody, like people were basically taking their private keys and burying them in treasure chests, which doesn't really work, if you're an institution that needs to access your cryptocurrency multiple times a day, for example.
Yeah, exactly. And also, by the way, it unlocks specific. I'm not sure that Anchorage are actually using MPC. They use a slightly different technology, although in a much more institutional way. But I think one of the advantages of actually MPC is that it also provides flexibility from a regulatory standpoint, right? So I think a lot of what happened in the last year or so that we started to see across multiple jurisdictions. I think probably the first were the Germans with the BaFin license, and then the Singaporeans with the payment license, and now clearly in the US with the OCC letter that there is sort of a direct when let's assume you're a bank or a financial institution, and now you want to set up a licensed activity. You need to understand how you set up the key distribution, right? So one way to do it is that the bank or the financial institution holds 100% of the private key material, right? And then I'm as a customer or a fund, I have sort of 100% counterparty risk to them, right? Whereas one of the powerful things that MPC can actually enable people is to really distribute that trust, right? So I can have the part of the private key material to actually go into the mobile device of the consumer, of the end customer, right? So it's not that the end customer, if he loses the device, the private key is gone. There is still sufficient redundancy over there, but you have this sort of mutual responsibility or mutual ownership in between the financial institution and the customer, which I think this is a sort of the promise of blockchain, right? This decentralized capability of blockchain on the macro level brought into the micro level of the interaction between you and the service that you're using, right? That you don't really have full risk to the service, right? So those are some of the things that you can really do with MPC that they both have implications on the regulatory side that I think are fascinating, and also implications on, I think, just generating more trust and more efficiency in the market.
Absolutely. And there's one more thing I want to ask you about. Actually, a few months ago, I was speaking with Alex Mashinsky, excuse me, who's the founder and CEO of Celsius, as you mentioned earlier. And he mentioned Fireblocks specifically, in that, I sort of had asked him whether or not users' accounts were secured with insurance. And he said, no, they're not insured. We don't have FDIC insurance or anything like that, but we do have this fantastic security company, Fireblocks, that is, sort of going to prevent any funds from being lost in the first place. So I want to ask you about that response in particular. Do you think that, sort of as a general standard in the cryptocurrency industry, there still is sort of a lack of insurance that's even available for platforms like Celsius or Binance or, various kind of cryptocurrency platforms that hold their users' funds? There's a lack of insurance available for them. And as a result, companies like you and other cybersecurity companies have kind of become the most important thing. It's like, we don't have insurance, but we do have these fantastic cybersecurity companies and providers. What are your thoughts on that? I mean, do you think that that's sort of enough for the cryptocurrency space in the long term? Or do you think that insurance products will need to be made more available over time?
Yeah, so it's funny that actually Alex said that, because they actually have insurance through us, right? So we are
Oh,
we are
okay.
sure, yeah. we have insurance for cyber and E&O, which basically extends from even hacks to things like technology errors, right? That
Oh,
basically, if your platform fails, then, and for whatever reason the funds are gone, then you're still secure. By the way, this technical insurance is actually unique to us. I don't think that there are other providers that they have it,
okay.
but Celsius actually, through us, and the customers of Celsius are actually insured, right? So they have insurance. Having said that, there is still limited capacity in the market, right? So it's not that. I mean, it's also true for FDIC insurance that you are insured up to, I don't know, $250,000, right, on an account basis. So similar to that, the insurance market right now for crypto custody is somewhat non-intuitive and fragmented. So for providers like ourselves, you need to invest a long period, a lot of effort along a fairly long period of time to really obtain that insurance. And the insurance contracts are non-standard, and you need to really hire the best insurance and cyber insurance lawyers to really review those contracts and negotiate them. So it's far from being intuitive. I mean, I think that we've done a lot of effort. I personally spent a lot of time to get our insurance.
Mhm.
I think the situation improves, right? So I think that there is more appetite from the big insurance syndicates, and I think that insurance at the end of the day is important for the space, because the amount of technical due diligence that customers can do on a provider like us or like Celsius is somewhat limited, and you would sort of need those insurance. The reason why we obtain an insurance and others obtain insurance is because the insurance companies have done enough due diligence to understand that the risk is really low, right? Otherwise, they won't insure us. They don't
Mhm.
insure you because they think that you can actually lose or be susceptible to a
Right,
claim.
right.
So you basically need those guys to really create the standard and to vouch for what are the solutions that are trustworthy, right? Because they insured them, and through that, basically pass the trust to the end customer.
Right. I see. And thank you for, I'm kind of, I hope I didn't misunderstand Alex. So Alex, if you're listening to this, uh, uh, my bad, but thank you for explaining that, for clearing that up. I think we're just about of time, Michael. So before we go, is there any final announcements you'd like to share, or any news, or how can our listeners also find more information about Fireblocks?
Yeah, of course. So I think the best way to find more information about us is to go to our website, fireblocks.com. If you're interested in the solution, there's a contact us button, and just fill out the forms. We will get back to you in 24 hours and provide demos and so on. So we are really we are rapidly expanding our network, and the amount of institutions that are using our platform. And so this 100 customers is actually a great milestone for us. We're working on a lot of new stuff. I mentioned DeFi. We've recently integrated with a really cool platform called X Margin that we are really excited about. That allows, again, sort of they doing this decentralized clearing and option trading and so on top of our platform. So people can definitely check it out. What they're doing is really philosophically aligned with where I think the future is heading.
Wonderful. Thank you so much for your time, Michael.
Rachel, thank you so much.